Hi, I'm James Sykes, President and CEO of Baseload Energy, and I'm very honored today to have with me Mr. Justin Huhn, who is going to talk to us about the uranium markets now and what we expect in the future. Justin's been running the Uranium Insider for the past 3 years, basically, starting out as a free newsletter and on Twitter. And then about a year and a half ago, he started uraniuminsider.com. So if there's anybody who knows uranium space today, it's Justin Huhn. So thank you for coming along.
It's my pleasure, James. Thanks so much for having me. I'm really honored to be a part of this. I thought I'd do a quick slideshow presentation, maybe about 5 minutes. We'll just run through kind of some basics of the fundamental setup here, and then we can go into your Q&A. Very basically, most people don't know that uranium is actually a growth sector. The sector is set to grow from 1% to 3% every year for the next 2 decades at least. There are 53 reactors under construction globally in 19 countries. There's 98 reactors planned for construction, 326 reactors proposed in 30 countries. The sentiment in the United States, at least for the past couple of decades, has been relatively negative around nuclear, but people don't understand it's a sector that's actually growing. So keep that in mind as we continue through this quick slideshow. On top of that growth, there are no new major mines coming online. So we have a couple of large mines that are on care and maintenance. That's Cameco's McArthur River in the Athabasca Basin of Saskatchewan, Canada. And we have Paladin's Langer Heinrich in Namibia. And those two mines account for about 25 million pounds, a little bit less annually when they're actually in full production. But besides that, there's one small mine set to come on in Brazil in 2 to 3 years. That's maybe about 500,000 pounds a year. And there's Russia's mine number 6, which is set to come on maybe the middle part of this coming decade. That is a few million pounds a year that will entirely stay in Russia. Russia has a huge export business. This is a slide from Trade Tech showing the supply base is increasingly restricted. So the big circled highlight there, that's 2020. That's the COVID supply shock that we'll go through a little bit more in a couple of slides ahead here. But this is essentially showing the amount of supply offline from normal production as we go out currently and as we go out towards the later part of this decade and beyond. These are mines that will increasingly deplete. These are mines that are currently on care and maintenance or suspended entirely. You can see that that's a substantial shortfall. So in 2020, we had a shortfall that they're showing here is about 70 million pounds. That's a huge supply shock. And we've got about 180 million pounds of demand annually currently for this year and last year. And we had less than 120 million mined. So it's a massive supply shock for last year. And that supply curtailment is going to continue into 2021, 2022. It's not expected without any further surprise impacts to be that great, but still between 20 and 30 million pounds of supply less than demand in the coming years. This is the WNA Fuel Report that was released in 2019. And it shows you, this is the reference case. So they did a lowercase model, a reference case, and an uppercase based on projected growth of the sector. This is the reference case, which is sort of let's call it the most likely to happen case based on modeling that they created for the WNA with just insiders in the sector that spent months and months and months crunching numbers of reactor builds, of production, et cetera. And you can see even in the reference scenario, even when the restarted idle capacity, I don't think you can see if I move my mouse around. So it's the yellow is the restarted capacity that they see 2024. That's likely to be McArthur River restarted full production 2024. It barely even meets that growing demand, and demand takes off from there. So it's a hugely growing sector, and without new mines coming online, which need much higher prices, this is the situation we're looking at. So 2020 was a windfall for uranium. It was a crazy year. I think we all can agree to that. And but for uranium, it was really a shock to the system that, in our opinion, from an investing standpoint, moved the investing thesis forward at least a year, if not more, based on the supply shock. Kazatomprom shut down their well field development for 4 months, from April to July last year. That was a 10 million pound production loss for the year of 2020. However, we expect that that production loss will continue into 2021 due to the delay in production that comes from the well field development that was taken offline for those 4 months. So they start drilling wells again in August last year, and that production doesn't start coming online until the second, third quarter of this year because of the time that it takes to acidify the ore body. I won't get too deep into that, but we expect further production loss from Kazatomprom for 2021. In fact, their guidance for that should be coming out early next month. Cameco last year closed Cigar Lake for 6 months. That's 1.5 million pounds per month. They had a roughly 9 million pound production loss. So we're at 20 million pounds between Cameco and Kazatomprom. Ranger has been operating since 1980 in Australia, and it just closed this month. They produced an average of 6.5 million pounds for the past decade. That had tapered off a bit the last couple of years. Either way, it's quite a big shock. That was a very big mine, produced a lot of uranium for 4 decades, and it's just been taken offline. Cominac is another pretty big mine in Niger that's been operating from about the same time period. That's set to close this quarter. Produces a little bit less than Ranger, around 3.5 million pounds a year. Again, so we have no new mines coming online essentially, and we have these 2 big mines closed this year. This is a chart from TD Weekly from Greg Barnes. This is showing and the data comes from UXC. This is showing the spot volume versus term volume. So if you look at from the middle of the first decade, 2004 through 2009, 2010, you can see the spot price is that dotted line there. You had huge term contracting volumes and smaller spot price volumes, spot trading volumes. And the exact opposite is the case now. So for the past almost 10 years, we've had very minimal term contracting, but heavy spot volume. And a lot of that spot volume is coming from trader churn. So that's pounds being traded back and forth between traders, not necessarily purchasing by end users. In fact, most of it is trader churn. So essentially what we're seeing here is a slow recovery of the spot price with still small term contracting volume. And that's sort of one of the big things that we're waiting for in this sector, is to see a recovery in term contracting, which we expect to start to happen sooner rather than later. This slide is from Yellowcake PLC. They're a physical uranium fund. And this is showing the European and United States utilities and their coverage by contracts going out into the future. So if you see the coverage is above 100%, that's taking their inventories into account, as well as their contract deliveries going out into the future. If we look out to 2024, you can see that the United States, which is the green line here, the US utilities are majority uncovered. They're 47% covered by contracts. The uranium fuel cycle takes about 2 years, 18-24 months for the uranium to come out of the ground, be converted, be enriched, be fabricated into fuel and shipped to the reactors. So 2 years is now when in the uranium market. So the fact that the majority of the United States utilities are uncovered in 4 years, this means that we are going to see an increase in term contracting to cover that deficit. The European utilities are a bit more covered. They typically hold about 3 years of inventory. The United States utilities are right around 2 years, probably a little bit less at this point. So that's kind of a really quick, I hope I'm not speaking too quickly here. That's a really quick kind of picture of the fundamental backdrop, and it's super important. But really from an investing standpoint, sentiment is everything. So I want to discuss really quick just kind of what happened in the last month. If anybody's been paying attention to the uranium sector, the past 6 weeks have been on fire. The equities have made moves. Some of them are up 2 or 3x over the course of 6 weeks. It's been phenomenal, while the spot price has stayed flat. So what the heck's going on? Well, Friday on the 4th of December, Bear Traps Report, Larry McDonald's newsletter, came out and with an article on uranium, making the case for uranium, essentially stating the obvious that the energy sector had been taking off, oil and gas, iron ore, copper, and uranium had been flat in the third quarter of 2020 into the fourth quarter of 2020 as well. And McDonald just highlighted the seasonality that typically happens for uranium in the late winter and into early spring of every year, most years, I should say, and the opportunity for uranium then. And that morning, that was the morning of the 4th, the equities were on fire. That was the largest volume day for NextGen in the stock's history. It was the largest volume day for URA, the largest uranium ETF in a number of years. We saw record volumes across the space that day and the following week. Now, to follow that article, pieces of that article from the Bear Traps report were picked up and published by Zero Hedge. And Zero Hedge has a huge following. They cover, investing and politics. And this article came out. It says the 4th, Saturday the 5th, but it was late. It was after hours on the 4th when that was released. So the market got to stew over that on the weekend, and the following week, the volumes and the surge in prices continued. And this just continued throughout the entire month of December, and it's continuing now. We're seeing a little bit of profit taking here, but the stocks are really outperforming. So this is just a couple of charts I wanted to share. This is URA, the Global X Uranium ETF. You can see the huge surge in volume that happened starting in December. Same thing with NextGen. That was that record volume day, that huge spike right there. And the volumes have stayed strong. You can see back going a couple of years. So what we're looking at now is something that we like to call a flywheel effect. It's sort of how momentum begets momentum. And what we're looking for at this point is kind of confirmation of what we think could already be starting, which is the entrance of financial players. We don't have hard evidence of this at this point, but the pieces are all there, and there's kind of some hints here and there. So that's what we're looking at. Primarily large inflows of capital into ETFs, which we did see and are seeing. The reason that has a flywheel effect is because when large capital flows into these ETFs, and this might be obvious, but I'll state it anyways, the ETF then buys the underlying holdings indiscriminately, just at market price. So they just hit the ask. So you see big volumes come into, especially their upper holdings, the holdings that make up a larger percentage of their assets under management. And we're definitely seeing that happening. And the way that financial players would work was they would accumulate the equities first, which perhaps they're already doing. And second, they could come into the sector buying physical uranium. There's nothing stopping them from doing this. Besides a confirmation that the bull market is here and that purchasing will squeeze the physical market. This happened hugely in the last bull market, and the funds, the financial players, had an incredible effect on the market overall. They basically essentially did exactly what they intended to do: accumulate the equities, buy up spot material, and really squeeze the market. And they squeezed the utilities, and the sector went nuts. So this is a chart of the spot price of uranium going back 2 decades, and volatility is the name of the game in uranium. It's a market that has only roughly 60 equities that are publicly traded, and there's only a handful that institutions can buy. And you can see the spot price just absolutely skyrocketed in a very short order. It went from a low, I believe it was $8 a pound in 2001, up to almost 140. I think it was $134 in 2007. And now we're starting to see the spot price recover in the lower right. And as far as I can tell, this is a bull market for uranium. We have, I don't have the chart here, but the underlying other elements of the fuel cycle, SWU, which is the price of enrichment, is consistently rising. Conversion is at all-time high prices at the moment, and it's looking really positive. I run a newsletter called Uranium Insider, and I built up a really good team with me, former fund manager who's had decades in the resource space, big contributor to the newsletter, and we built up a really great community of people. We share what's called our focus list. This is our top companies in the sector, in our opinion, to speculate on for the bull market. So members receive our stock picks, essentially. We keep this list short, only 10 companies. Right now, we only have 9, I believe. You get a very extensive monthly newsletter that comes out towards the beginning of every month, as well as intra-month bulletins that go out as needed to cover market moving macro information that comes out in a timely manner, or new trade setups and company information that needs to come out intra-month. We've done pretty well. Since inception, which is about 18 months, we're up 175%. Over 100% of that, 120% came last month in December of 2020. It was a phenomenal month. And I don't think that we are going to see a straight moonshot. Nothing goes up in a straight line. But I believe that this year is going to be very good for uranium. And we're looking at a 3 to 5 year trade here. And I expect the spot price, in my opinion, probably will be north of high 30s, low 40s by the end of the year. And we're seeing a little bit of a sell-off here. I think it's an excellent time to enter if you're not already in, or a good time to add. We're officially in a bull market for uranium. So in bull markets, dips are to be bought, and that's what we're doing. And we'd love to have you join us. Thank you so much. I think
thanks.
Oh, there you go.
Yeah, no, yeah, it took a while for things to come back. Cool. Thank you very much for that, Justin. Very insightful. That was absolutely awesome. You know, it's what I've come to expect from you, as you know, we've spoken many times. So, excellent presentation.
Thanks, James.
So, just following up some couple questions here. Then, when you showed in slide 1, you've got all of these plans for reactors under construction, planned and proposed. Has that changed significantly since, like, let's say 5 years ago? Do we see more reactors being planned or under construction? Are we seeing less? You know, you brought up a great word, sentiment. Sentiment is everything in the nuclear space. It's a tricky one, I know. But do you think that the nuclear sentiment has kind of, you know, has it just gone on par for the past 5 years? Has it kind of lagged and not a lot of people felt nuclear energy is the right way to go? Or do you think that there's a more positive sentiment?
From what I can tell, it's substantially more positive. The sentiment is more positive for sure. There are more builds as well. The builds have been increasing. The plans for builds have been increasing. Japan is also restarting reactors. They've announced that they've got a full-on energy crisis right now over there, and all of these idled plants. They've restarted 9 of their 53 that they shut down after Fukushima. But what I've noticed since I've been watching the sector since 2016 is, I mean, some of the stuff we're seeing almost on a daily basis now, I would not have dreamt of in 2016. It's unbelievably positive when it comes to like the environmental left embracing nuclear. You know, it's not universal here, but it's happening all over the place. You know, nuclear has slowly pulled itself out of what would be considered a dirty, you know, toxic and dangerous energy source. And a lot of that came from, well, not only a couple of disasters, but, you know, media that's been pushed by the oil and gas industry to negatively paint a picture on uranium in the nuclear industry. So every time a nuclear plant closes, you know, natural gas or coal picks up the pieces. There's just sometimes there's no other sources for baseload energy when nuclear plants are closed. So the fact that we're seeing even some embracing of nuclear from the environmental left is a phenomenal sign. And we're seeing bipartisan support in the United States, which is a first for a very long time. And you don't see that pretty much anywhere right now, besides perhaps this, which is good. Yeah, it's just very positive. The other exciting thing is the SMR, small modular reactors, which are being funded and supported by governments around the world, in Canada and the United States. President Trump just released something the other day highlighting further funding and further support for SMRs for potential use in, you know, in energy for the military around the world. It's really exciting time for nuclear, and it's great to see the positive sentiment underpinning all of the other structural fundamentals that might be affecting our investments, to actually see that it's something that people are feeling good about talking about and discussing and getting behind as a carbon-free, emissions-free source of energy in an increasingly energy-intensive world. So I would say that the sentiment continues to improve from what I can tell.
Awesome. That's really good to hear. And you've already touched on something that I was going to talk about: small and micro modular reactors.
Yeah.
Personally, I think they're the nuclear renaissance. I think we need that in this industry. That because a lot of the complaints that I read about is people always say the waste. What do you do with the nuclear waste? And the costs for these large builds are just so extravagant. But I think that small and micro modular reactors really answer those questions, and they just they diminish everything in size and scale. So that's, for me, that is the nuclear renaissance, and hopefully they will be taking light and taking place in this whole baseload energy system that we need. Yeah, as you're well aware, we're in we're in kind of a situation here. Everyone's going on about global warming, and what's one of the cleanest, safest fuels out there? Energy sources, nuclear energy. So for sure. When do you think that we can actually start to see small and micro modular reactors really coming online and just kind of outpacing their older, bigger brethren? Do you see that happening in the next 5 years, 10 years, or even sooner?
I think the next 5 years is probably pushing it. I think that we'll have prototypes within a few years that can be tested and proved to be safe and proved to be functional. I would say the second half of the decade, we could potentially see them starting to actually roll out and be in use. I mean, the sentiment, like I said, is very positive around it, but sometimes these things can take a while to work their way through bureaucracies and make sure that they're functional and safe and all of that. So that stuff takes time, but I would be surprised to see them hitting the grid within 5 years. I'm shooting for later part of the decade.
All right. So we see that nuclear space is growing, as you mentioned, about 1 to 3% for the next 2 decades. Is that being driven by certain regions? Like, is that North America? Is that Asia? Is there specific areas that are really driving this? And if so, what will happen if once they get built up? Is everything just going to level out and stay at par?
I would say that China is definitely the big player here as far as their builds and their forecasting of builds out into the future. They're a big part of the demand story for sure. They're not all of it. Like I mentioned in one of the slides, that there was in the proposed category, there's 30 countries that have reactors proposed to build. China is the bulk of the reactors that are being built now and are being or that are coming online soon or being proposed and constructed. So China is definitely a big part of that. It takes so long for these things to come online and be constructed, and the Chinese do it faster than anyone. There's also a huge build out. The Rosatom, the state-owned nuclear entity out of Russia, has a massive export business. So they're funding, building, constructing, training staff, running the plants, supplying the fuel, dealing with the waste for the life of the reactor. And they have exports all over the world, and they're really pushing that. That's a huge business. So behind China, I would say it's Russia. What happens when they're all built? Well, I mean, the demand stays for the life of the reactor. So it's not like the reactor comes online and then that demand drops. It's like that just adds to the total demand, and it only increases with each new build. So every reactor that's built is going to consume a lot of uranium for 60, 80 plus years. So unless we see a drastic change in that demand or a drastic change in the supply, like an unknown supplier that might come into the market, I don't know where that would be at this point because it hasn't happened yet. Things are looking very positive on the supply and demand side of things. Yeah,
perfect. That's cool. And like you said, the 60 to 80 year lifespan for nuclear energy. Some of these are on those, and maybe they can even push hundreds of years. That's what I think. One of the beauties of nuclear energy is just that longevity, and they don't waver. They're the most efficient form of energy out there. You can't beat nuclear energy. It's Yeah, it's
Yeah.
just absolutely great. What about the idea of reactors coming online and actually using some of the waste material to support their nuclear energy rollouts?
Well, that currently happens very little. There's one facility, I believe it's in France, that makes MOX fuel, a mixed oxide fuel. It's very expensive to reprocess the waste into usable fuel, and it can only be used in reactors that are designed for that. So at this point, I mean, I love the idea of reusing waste simply for the fact of having less waste, of course, from an environmental perspective. But to the extent it's happening now, it's not really. I mean, that's already considered in supply and demand forecast with the mixed oxide fuel. And there's a bit of reprocessing, or let's say down blending, that happens in Russia. That's not really waste, but that's nuclear warheads being down blended. It's also quite expensive, and generally believe that uranium stays in Russia for their exports. But it's something that I know that they're working on, and like I said, from an environmental standpoint, that'd be fantastic. But at this point, it's expensive to do so, and it doesn't really affect the outlook for the investment thesis, let's say.
Right. Yeah, as far as we know, and as you mentioned, nuclear it's a very safe energy. It's a very safe form of energy. Myself, Fukushima, everyone's probably aware of Fukushima nowadays, back in 2011. And myself, I don't really see that as actually a nuclear disaster because there wasn't really anything wrong with the plant. It was just, that was an environmental, that was a tsunami hitting the plant.
Right.
So
Right.
if Fukushima hadn't happened, where do you think that we would have been today? Do you think sentiment would have been really high? What are your thoughts on that?
That's a good question. Well, I certainly think it would have left out that huge negative piece of sentiment around nuclear energy in general, as well as on the investing side of things. After the spot price peaked in 2007, it fell back down and started to recover right before Fukushima in kind of the 40 to the 50 range, $40 to $50 a pound range. So the big reason that we really had such a long bear market was because they closed their reactors. It wasn't necessarily because of the disaster. So they shut off all of their reactors, 53 or 54 reactors, just pretty much overnight. It was 10% of global consumption that just turned off. So that really is what led to the oversupply of the past decade that we're finally working through. And so yeah, it's hard to say. I mean, assuming that no other nuclear disasters happened and Fukushima hadn't happened, I'm sure that we'd be sitting in a more positive sentiment here. But things are pretty darn good, all things considered, when it comes to that.
Yeah, you've painted a great picture from an investment side of things, that we are in a bull market, and the spot price of uranium back when Fukushima happened was around $80. Yeah, it dipped down to about 60, then jumping back up to 80. Things were looking great. Fukushima happened and then just cratered. So hopefully, we can reach those levels again, considering that there's more demand now. That the uranium spot price will pick up again, as you've shown very succinctly. That we should definitely be entering that. Should investors get into uranium? You have already mentioned this. I just want to really drive that one home.
I think so. I mean, I've got my money where my mouth is. I feel extremely confident in the trade over the midterm. It's difficult to say in the very, very short term what this market will do. It's difficult to say that ever, as any investors who've been watching this for longer than a couple of years know. There's been plenty of false starts, but we think that the mobile inventory is pretty much going to be worked through this coming year. That had to do with oversupply from the previous decade. Spot price currently right around $30 a pound, and we know it absolutely is going to 50 to 60 a pound, because that's where it has to go in order to bring on new supply to balance the market out. Anything beyond that is like Mike Alkin said, is gravy. If it goes above 50, 60 a pound, it's just gravy. So considering the moves in the equities this past 6 weeks with spot flat, I just have no idea what's going to happen when it goes to 40, 50, $60 a pound. It's an absolute explosion usually in the equities when spot really moves. So I think so. I think, I think 2021 is going to be a good time to get in if you're not already in. And I'd say this is absolute confirmation that it's a bull market and dips are to be bought. So that's what we plan to do. Yeah.
Yeah, I agree with you 100%. And you used the magical word there. It has to go. It's not one of these what if, what if uranium's going to go up? No. It has to go up. We got to keep the lights on. Price doesn't go up, nobody's mining. We've already shown the case that we've lost supply in mines shutting down. We've got nothing coming online. It's the perfect storm. It's going to be a crazy ride forward. This is where I really hope that baseload makes that discovery and we move forward.
Yeah.
So you mentioned that Uranium Insider you're following 9 companies and you typically follow 10. You have an idea for who the 10th company might be?
Dude, you guys, you're an explorer. So technically, explorers are a little bit of a gamble because you haven't made the discovery on this property yet. You've made plenty of others, Mr. Sykes. But you guys have all the right ingredients. Your share structure is great. Your management team is great. Steven is awesome. And you're obviously a complete rock star in the basin. So, and I know the story of Shadow coming from you. You seem very excited about that project. So we're very, we're excited to follow you guys. Yeah.
Cool. That's great to hear. And I'm glad to hear Uranium Insider's taken off and continues to grow. And hopefully people watching this Ore Days event will get to know you and hopefully they reach out to you.
Thank you so much. It's been a pleasure. Yeah. Good to see you face to face and nice talking with you. Thanks for letting me share this with your audience here.
Likewise, Justin. Thank you very much and have yourself a great weekend.
You too, sir. Thanks.
Take care. Bye.